Good afternoon, everyone. I'm Mike Stevens. I'm going to be your facilitator today. A little bit about me. I'm a Red Seal electrician, and today we're going to be discussing the financial part of things when it comes to running a business. So for those of you who are just tuning in or following along, we talked already about having a business plan and some of the pitfalls and some of the problems some owners might face. Now we're into one of the more crucial parts, which is going to be the money side of things. But not to worry, I'm happy to be joined by members of the panel today, and they're going to be helping us today and what to look for. So I invite you all to introduce yourself. We'll start with Abby at the end, and tell us about yourself.
Hi, my name is Abena, and I work at Bank of Montreal. Been there for 4 years now. So, yeah.
Jen?
Hi, I'm Jennifer. I'm from Freeland Caldwell Riley. I'm an accountant there. I've been a licensed accountant for almost 20 years now.
Oh, excellent, excellent.
My name's Nate. I'm an account manager at Desjardins, and I've been there for almost a year now.
All right, perfect. So to my understanding, I don't really know too much about business. I mean, I'm an electrician by trade, and that's like all I really got. But when I come to business, I keep hearing terms of, bookkeeping, accountants, taxable expenses, and things of that sort of nature. And that's sort of like the language of business, if I'm not mistaken. So the first question I have for you all is kind of a two-parter. Let's talk about a little bit about how important it is to have an accountant for your business. And the other one is kind of choosing one, because for me, I have some difficulty even choosing one for myself. So I'd imagine it'd be a pretty complicated choosing one for your business. Whoever wants to start first, take the floor and let me know. Let us know.
So, in terms of choosing a business plan for your business, it all depends on what kind of transactions that you will be doing in terms, because you don't want to incur too much fees. And so, depending on the plans that you're choosing for your account, you would want to check to see, which one is suitable. I don't know about what the other banks do have, but I would check every other bank to see how you can reduce the fees. I know Bank of Montreal does have a business plan that doesn't have any fees to it, so you can check to see if that is something that will be beneficial to you. That way, then you're reducing the your monthly expenses and making sure that you're saving as much as you could.
For sure. No, that's good. We got to keep the money down, otherwise we're going to be losing our profit margin big time. Jen, do you want to do that?
With the just to bounce off the account fees and that, when I see the transactions and that, it does really make a difference on what plan you do have. There are quite a few out there where you need to put some thought into how are you going to handle spending your money? Are you going to write checks? Are you going to pay by e-transfers? How are you making these payments? And the reason why that's so important to make that decision at the start is because it will help your banking person fit you with the best plan. Because if you just dive into a plan, I've seen some clients where they're getting just hammered with the $1.50 transfer charge one day right after another, and it's so expensive. And when you're first starting out, every little bit counts. So
absolutely.
As to what types of plans are out there, I'm not really sure.
Yeah, look, I can take up on that as well, right? Working at Desjardins, like our whole process when you first start off is to have those conversations with people, right? So right off the bat, like, look, we'll talk to them, okay, well, how many transactions are you envisioning having, right? During, let's say, a month or during the year, what type of transactions are you going to have as well, right? And then with that being said, it'll give us a little bit more insight on what the business actually needs and then what we can provide them as some sort of solution, right? At the end of the day, we don't want to give an account fee that maybe this individual won't even use to its full capabilities. Maybe what we can do then is reduce it to a certain one that's kind of meant to that certain criteria, or maybe even that certain business sector, right? So very, very, very key thing to look at.
For sure. And those are all great points. We got to keep the cost down, otherwise we're not going to be a successful business. So especially when we're running a business, we're going to have a relationship with the banks, right? I'd imagine so. So I guess this next question is going to be, what kind of documentation do you need for the bank? I know it's a little bit more complicated than just having, an everyday checking account.
Yeah, go for it. You touched base right away, yeah.
depending on the kind of business you're trying to open, if it's a corporation, if it's a sole proprietor, if it's a partnership, you want to register first with Service Ontario. So I know with right now you can get like documentation saying that, you've registered this business either as a sole prop or as a partnership or as a corporation. We need those documents in order to open an account, so that way we know what kind of business it is, and go from there. So register the business first and then go to the bank. That's what I say.
Sorry, you said something interesting there. So for myself, I'm an electrician, and my background is construction. So like, what kind of business would that be? Is that like a corporation? Like,
So if you are a sole proprietorship, then you are just basically registering the business under your name. So any earnings or any business funds you get is basically money you earned yourself. If you want to make the business separate from your personal earnings, then you're looking to do something like a corporation. Then that way you can just separate the business from your personal expenses.
oh, I see. That's good to know. That's very interesting. Jen, you like that, Jet?
No, I don't think so. The banking side of things, I think I'll just leave to these guys.
I'll just kind of tattle on to what she was saying as well, right? Look, if you're going to look at getting incorporated, obviously something to look at is maybe getting involved with a partnership of a lawyer as well, right? Get an article in incorporation, make it all legit, so then when you provide it to us, we have all the documentation to then open up that account and then get the ball rolling as well, right?
For sure. That's
Just
definitely.
a note on the lawyer piece there with the incorporation.
Yeah, I heard that too. That's
Please,
important.
If you are going to incorporate, definitely speak with an accountant, because how you structure your shares, like who owns what parts of the business, is extremely important, and you want to get that right at the beginning, because once you're committed to a share structure, it's difficult to change it. It's not impossible, but it is difficult, and definitely I think sometimes there's a bit of a misconception that it's just the lawyer that you have to talk to about the incorporation, but depending on your lawyer, depending how much experience they have, you should really touch base with an accountant, and even have the lawyer and accountant speak to each other.
No, most definitely. We gotta have lawyers. So we've got lawyers, accountants. Yeah, no, definitely having a business is getting it's getting pretty complicated. But luckily, we have you guys to help us, educate us, and guide us going forward. So let's talk a little bit about having credit cards. So used properly, they can be very beneficial to you, but used incorrectly, they can be very disastrous. As a business owner, like, how important is having a credit card? And let's talk a little bit about like some of the advantages and just some of the disadvantages it is to having a company credit card.
I'll touch on it first.
Yeah, and feel free. I mean, there's no set order, and
yeah, look, I'll touch base on it real quick as well. Having a credit card, like you said, is very beneficial to a business, especially if you're going to separate it, right? If you're continuously using your own personal credit card, well, then at that point there, at the end of the year, you can touch on that as well, right? When you present that to your accountant, they'll look at you and go, well, which one's business? Which one's personal? What'd you do here? Is there any proof? And at that time, it's not impossible, very, very difficult for you to then accomplish everything and then, kind of file your tax or whatever the case is, right? So if you can start at the beginning of the year to then separate those credit products from your personal, from your business, it'll just make everything so much simpler for you.
oh, cool.
To add to that, when it comes to actually having business credit cards, I think it is important and that's why you would want to open a business account, because the more credit, or when you establish a relationship with the banks, they are able to understand your business dealings, and over time they're able to give you products, pre-approvals, so you don't have to necessarily go through the hoops of having to get like a credit card and that kind of thing. So having a business account and establishing that relationship is really important, because then if you have 2-year business financials and stuff like that, it's easier for you to be able to get credit for the business and not necessarily use your personal credit cards for things. So
That's an excellent point, because we often see, especially our startups, cash flow is king in everything, right? So if you don't want to be maxing out your own personal credit card, and not that you're going to max out your business credit card either, it's just that if you get in the habit of that's how you choose to handle payments, then, which is kind of a cost benefit thing too as well. Like if you're just starting out, you don't have somebody probably hired to help you out to pay bills. So setting as many things up as possible on a pre-authorized withdrawal just makes that managing of the business piece a lot easier. And like you were saying, it helps to establish the credit. So then you start to build that relationship so that when your business is starting to go and it's growing more, now you need more than a credit card. You probably need a line of credit. So in that case, you've opened the door to that discussion. You've shown that you can pay your credit card bill. I know it sounds really simple and basic, but without that, if you can't pay
It sounds
your
really
credit
simple.
card, they're not going to sign you up for a line of credit.
Exactly.
So
Fair.
yeah, I think that's a really good point.
Like, I just want to touch base again on that because you raised a good fact as well. Like, or even then, right now, like on credit cards, what we can do is put, let's say, a minimum payment, right, a monthly minimum payment on those credit cards, right? So instead of missing, let's say, a credit card payment that month because it was very busy, right? You had to kind of get everything going for your storefront. Well, now you actually have the capacity of, okay, well, now the minimum's paid, that's fine. Now, whenever I get the chance, I can pay it out in full, right? Helps you out a little bit.
And as long as you're making that minimum payment, you're basically saying that you're paying the credit back, even though you're not paying the full balance, but you're still paying the minimum, which will potentially open other doors like credit cards and lines of credit or whatever that looks like.
Bigger potential,
Potentials,
right?
yeah.
No, for sure. So I guess when it comes to like having a business, I hear a lot of terms kind of thrown around, you know, like you got your bookkeepers, accountants, lawyers. Can we just like talk a little bit about like what they sort of do in the business, like how the accountants are a little bit different than the bookkeepers?
I'd say back in the day, the bookkeepers were it was more of like the role of they'd really watch and be very particular about every single expense going through, very detail oriented. And accountants are detailed as well, but in a different way. So when a bookkeeper is taking a look at things, they're like the front part of the process where they're recording all the transactions, they're recording all the detail, they're asking all the questions as to what is this expense for. They're often processing payroll for the companies. And then what would normally happen is a bookkeeper would pass off their work to an accountant for review, just for that second set of eyes. The accountant is a bit more, I'd say a bit more operational in terms of taking a look at the business as a whole and questioning why did something go up, why did something go down, looking for different reasons why things may have changed. And because I find when you're right in the details, it's hard to take that step back. So I think that's part of the reason why there's such a big difference between what a bookkeeper does and what an accountant does. They're both really important, and I'm not sure that was always really understood as much as it is now when talent is in short supply for so many industries, including our own. So it's I think there's a lot of value that a bookkeeper brings to running a business, especially in the details, because sometimes when it's so busy and you're losing sight of things, that bookkeeper will help you bring everything in line, make sure you've got all your checks and balances, and then when they pass it off to the accountant can just take that step back, take a look at everything, and then maybe something that catches their eye that they can talk to the business owner about in case that they haven't had time to notice themselves. And then they can start talking about planning and what are your plans going forward, and they can catch things if they need help with some financing. They're noticing that they're scrambling for cash flow all the time and different things like that. So I guess the difference is probably kind of the piece where they are in the process. The bookkeeper's at the front end of the process, the accountant's kind of towards the end, right before you file your taxes.
Right.
Or send it off to the bank,
Yeah.
whichever the case.
That's fair. I'm just going to touch base a little bit about that because I think you pretty much solidified everything, right? It's the beginning of the process versus the end. But something to also look into as well is there's a lot of bookkeeping softwares out there. Obviously, you need to be careful to which ones you utilize, right? Obviously, certain industries will recommend others. I'm just speaking off of experience because I know Desjardins has a bookkeeping software that we provide as well, right? So I understand it a little bit, so I'm able to speak on that. But there's bookkeeping softwares that are able to kind of help you. Maybe it's to maintain inventory, right? Those little things, instead of having that full-time bookkeeper put into place, that obviously it's going to cost you a significant penny, right?
For sure,
So
for sure.
use some sort of software that's able to help you those certain tasks that are able to be automized, right? Obviously, not everything's able to do so. So
Yeah.
by all means, please have an account that you like to talk to, right? But yeah, that would be my suggestion as well on top of that.
Yeah. Just be careful with the accounting software that you go with. Make sure it fits your business. But it's true. I'm glad you brought up the automation, because it's we've been dealing with some different cloud accounting softwares. There's some, you'll see, like, I'm sure we've all seen QuickBooks commercials and everything like that, right?
Most
They're
definitely.
very good. Their commercials are very, very good. I'm particularly partial to Xero accounting software, and I haven't seen yours, so
have to introduce
you will have to take a peek. But the fact that there's more out there, and the automation piece is huge, and I think it's going to become even more and more so, because you can't even find the talent for a bookkeeper, even if they're very difficult to find.
They're difficult to find, and also the cost.
Yes.
They're insane, especially
Yes.
if you're just starting out.
Yeah, most
Like,
definitely.
it's-
Yes.
You gotta watch that, right? But
So if you've got somebody at the bank who can help you figure out how to use an automated bookkeeping software, I'd grab hold of the opportunity, or even in terms of your accountant and that, because there are lots of, like, honestly, YouTube videos and different things. Just take the time to watch a few videos, read a few reviews before you dive into one. But it's definitely an option if you're looking at those bookkeeping or accounting fees, and you're not too scared of it, then might as well give it a try.
For sure, for sure. So that you brought me into a good question, because, like, if I'm just going to start off and have my business, you know, I have, like, myself and maybe a couple partners, some tools on the ground, because I'm an electrician, right? If I was going to have, like, a business plan, do I need to have an accountant, a bookkeeper, or both? Which one would you say is more important in starting off my business? Anybody can take the floor.
wow, that's a big one. I'll let you touch base on it first.
Yeah. So I guess it depends what it is that you'll.
Depends what stage.
Yeah, it depends which stage and what type of business you have. So, for example, if you're, let's say you run a daycare out of your home, and you just have a couple of kids, and maybe it's even just one family that you look after, so you're charging them to look after their children. In that case, I'd probably stay a sole proprietor. There's no sense in complicating things. You just file a personal tax return. Whereas for yourself, with the electrical business, you'd probably want to consider incorporating, especially if you think your sales are going to hit over a certain amount. And I'm very, shockingly to know, I'm sure, is that I'm very risk adverse. So if you're going into the electrical business, incorporating just kind of helps put a bit of a buffer between your personal and your corporation. And if you're going to go down the corporation path, then you do have to file a corporate tax return every year, and those can get complicated. It's not that there are bookkeeping firms out there, I believe, that can file corporate tax returns. But if you're at the beginning stages, and you've got, depending on the plan that you've got in your own mind, how big you want to get, what kind of tax planning strategies you want to discuss, then that's when you might. I'm probably extremely biased, so we'll just lay that out there, right? I'm extremely biased as an
That's the thing,
accountant, right?
Because at the end of the day, if you're a small business, if you're starting up small, I say start small, kind of understand the business a little bit before you incorporate. So
Yeah.
I think you are right.
Yeah, yeah. So then, in terms of whether you go with a bookkeeper or an accountant, maybe you start with a bookkeeper to keep your costs low. But then maybe after a year or two, then you might want to move to an accountant, or go with a bookkeeper and then just have the accountant do the year-end tax return, just so you've got a second set of eyes on everything.
Excellent, excellent. You said an interesting word in there, a proprietor. For those of you at home, I don't know what that means. I'm sure you guys can kind of touch about what that means, proprietor and corporation, and kind of a little bit of things like that. So that way, anybody who wants to start a small business, they kind of know they know some of these terminology, so that way they don't get curveballs thrown at them.
A sole proprietor, in simple term, is basically like somebody like me wanting to just open, an example, the daycare, and not really having to complicate things. I run a little daycare at the home. I added whatever that may, like, I don't need.
You don't need an accounts
and
receivable
and
department
accounts
or
receivable, nothing
payroll.
like that.
Yeah.
That's a sole proprietor. Any income basically you make is part of your yearly income, is how they see it. So if somebody is to sue you, technically they're coming after you, everything and everything you've got. If you're gonna go corporation, then that is a separate entity on its own. So if something is to happen to the business, if somebody's coming to after the business, they're not necessarily coming after you, they're just coming after the business or whatever it's got. So it's that distinction that makes it a little bit different.
Yeah, no, I completely agree with you on those parts, right? Like, and it's also, you'd have to look into the different benefits as well of getting incorporated, right? Different industries is better. Like for your sake, being an electrician, while like you were mentioning, there's sort of that liability aspect, right?
Yeah,
so it's easier to have that, right? Or even there's tax advantages to being incorporated as well, right?
Yes.
And certain industries can vary a little bit, because I know for, let's say, residential or like real estate, right? For real estate investments, if you incorporate, the only thing it helps you for is liabilities. It doesn't really help you with any sort of, let's say, tax advantages, right? So that's why it's keen to look at what sector you're in and which one's more beneficial. Obviously for you, in a smaller sense, maybe you don't have the upright cash to then get incorporated, because it will cost a little bit, and like you were saying, every penny matters at this stage, right?
Definitely. You got to keep the cost down.
Exactly, right? So then maybe the best way to do it is start off sole proprietorship, but then as soon as you start getting those bigger jobs, like we were talking about earlier, as soon as you get those bigger jobs, that's when you can start getting incorporated, and then you can look at restructuring, let's say, a little bit different for yourself, right?
Excellent. Those are some great points. Cool. So I know that when I'm filing my own like kind of personal income tax, I kind of do it at the same time every year, as we all do. Let's talk a little bit about like some of the differences in being a tax, whether you're a sole proprietor, whether you have a business, and let's kind of touch a bit on some of those.
So at the banks, we necessarily don't talk taxes. If there is anything, we say go see your accountant.
So that's why
That's why we have an accountant to really explain what that means.
So with your personal taxes, you do the January to December like everyone does, and you have to file by the end of April. If you're incorporated, for your corporate tax return, it's due 6 months after your year end. You can pick whichever day you would like for a year end. So if you're a seasonal business, you'd probably want to pick something towards the end of your season, so you've got some time to get your ducks in a row and sort things out. You don't want to have to be trying to answer year-end questions from the accountant when it's like, say you run a tourist camp or something like that. You don't want to be answering questions in the middle of July, right? You'd probably rather handle something in February or March or something like that. So whatever that date is, then 6 months after that, you have to file your taxes. I think if you owe any money, you actually have to pay your balance 3 months after your year end.
No, that's fair. And honestly, I'm just going to touch base a little bit about that year-end date, because even for us as a financial institution, right, like being a bank itself, or the year-end dates are very important to pick, right? Because at the end of the day, like yearly, what we like to do at Desjardins is review all of our files, right? So let's say if you have any financial needs with us, well then we'll review it together. We'll review, let's say, your notice to readers, so like your financial statements, all like so on and so forth, to see, let's say, what you made that year, and how it's going, and to see maybe if there's a different need and different products that we can maybe offer you in terms of solutions, right? So that's why picking a year-end date is very important, just in terms of the type of the company that you're with too. I can't touch base a lot about the taxes. I think you touched base on all of them, but not my expertise, so leave that to her.
And just to touch to a little bit more on the taxes, the corporate tax rate is very, very nice right now. It's about 12.5 to 13% if you're under a certain threshold. So, which is, when you're a small business, that would be where most of you would land. And so, just kind of a bit of a funny story. We were talking yesterday at the office where, since it's around the same percentage as what HST is when you're buying something, we have this question, or we see people doing it sometimes, where they're wanting to get year-end expenses in, and they want to make sure they have as much in there for expenses as possible to lower their HST return, or whatever the case may be. Quite honestly, since the tax rate and the HST rate are so similar, please hang on to your cash unless you really need that item. Don't purchase it, please. And it's just like we were joking earlier, even about when people say you can write it off. Well, you still somebody still has to pay for that expense, right? So you're literally letting that cash go outside of your company. So if you don't really need to make the purchase, like, just really think about it before you just think, oh, it's just a write-off. Like, if it's a larger amount, please think about it and don't
come from
just
somewhere.
Especially on Christmas time.
That's right. Just don't dive into it.
Right before year end, probably not a good idea to write it off a lot, but look into it.
Cool. So, we talked about a little bit about writing things off, and I know that's a pretty common term amongst just some of my peers that have their own business. They'll just say, oh, I'll just write it off, no problem. I'll just buy a truck and write it off. Let's talk a little bit more about kind of what that means, and what are some of the pitfalls that kind of come along with it too for our viewers at home.
Well, what some people may not realize, when, I think we were talking about here's the credit card, go buy the guys some lunch and stuff like that, right? So that would normally fall under meals and entertainment. And what I don't think some people realize is that the HST on any of those, you only get half of that HST back. I'm not discouraging you from treating your employees well. I truly believe if everyone's well fed, everybody's pretty happy. So it's a good strategy. It's just something to keep in mind. And I believe also I'm not super strong on the corporate tax world. I focus more on business processes and day-to-day operations, but I do believe it's only 50% of the meals cost is allowed to be deducted on the tax return, which I don't think people realize. So just when they're going a little bit wild and crazy, and again, if you're watching, you'll notice I'm a bit focused and obsessed with cash. So just something to keep in mind when just write it off. It's kind of like, well, is that maybe the best use of your cash? Yeah. And on the topic of the trucks as well, the type of vehicle you're putting into a corporation, please be very, very careful. CRA watches that like a hawk. They, if you're throwing a vehicle in there that doesn't really fit what your business does, you're walking a fine line, and questions will probably be, if it's completely justified, then it's no problem. And something else too is on the HST of the purchase of a vehicle, they cap it at a certain amount, so you don't get the full amount of the HST on a vehicle purchase depending on the type of vehicle. So just something so those would be the kinds of questions where you would probably speak to an accountant instead of a bookkeeper. Although there's probably some bookkeepers out there who would, depending on their experience level, know the answer to that right away.
But a truck makes sense for your electrician.
Yes, you're good. Don't worry about that.
So the truck's okay, but if I pulled up in a C-Class Mercedes two-door, that
yeah, a little tougher.
Where are you gonna put your electrical?
They might raise a little bit of eyebrows, eh? All right, so the truck is okay, but if I got a luxury vehicle, they might raise some eyebrows. So the audience is asking, when it comes to credit cards, do you need it? Is there what kind of helps it? Helps your business, or can you just survive?
So, did you want to touch base on it first, or do you want me to comment on it?
You can survive without it.
Yeah.
But I think is in the accountant point of view, it's easier for them to know what exactly was used for the business and what can be a write-off for the business. So yeah, I think to some extent, yes, it is. Then again, too, you're also showing your credit worthiness to the banks too as well. So I would say yes, it is.
And to touch base on that too, like I just did a presentation actually early this morning with the regional business center in terms of good debt, bad debt, whatever the case is. And obviously, credit cards like they're utilized pretty well within the business world, right? But it's not just being able to survive without a credit card. It just enables you to build some sort of good credit score with the institution that you're working with, to then provide them with, let's say, more financial products to allow you to grow, or maybe buy that truck that you want to write off instead of doing it cash. Well, then you can talk to, let's say, an individual like us. Well, you already have a good track record with, let's say, that smaller, credit card product, or even at Desjardins, like we have a specific program that starts you off with a smaller line of credit, right? So with that smaller line of credit, well then, almost like a credit card, you can utilize it as a day-to-day needs operational account, right? So that allows you to build up your credit score with us, and then next you know, well, if you need that bigger item, let's say down the road you want to expand, you want to buy another business, whatever the case is, well, you already have a good experience with us, right? So then it allows us to actually look into it and realize, okay, well, you're good at handling your credit cards, you're good at handling the small lines of credit and all that stuff, right? So it allows us to look at it. Yes, you can survive without it, but I think it's a great tool to utilize for your company.
Excellent. Can you touch base on just some of those products? Like how do they sort of help like the business? Like I'm not too sure. Like
Okay, so it depends on what products you're looking at, right? I'm actually in charge of a program here in the Northern Ontario called Clé Avenir, which is a youth program meant to help younger entrepreneurs to give them a shot, right? Give them a little bit of funds to kind of go out and do their thing, right? So that would be just an operating line. So a line of credit, a smaller line of credit, that's a really good product that you can look into as well. Credit cards, obviously, right? Those are like classic. We can do, let's say, like a term loan, a cash flow loan as well is another thing, but that's obviously not meant for, let's say, a smaller company, more of a company that's actually looking to grow exponentially. Lots of products that we can obviously provide you in our little tool cabinet, but those are some for the small business.
Now, in terms of, I'm only speaking for Bank of Montreal, when it comes to like small business credit, to be broad, I find that once you've established the business for a couple of years, you've run it, you will start getting like pre-approvals for credit cards. I don't know about Desjardins, but the line of credit is interesting. We don't give out lines of credit to businesses. We only give credit cards to businesses. And so if you're looking for lines of credit, then that's where they would request for like 2 years business financials. What does that look like? And so that way they'll be able to extend credit. So before you ask for things, check other banks to see what they can offer. That way you're not just, stuck with one bank, so that you can get the benefit from almost every bank if you could.
Yeah, look, do your research, like you said, right? Have a conversation with, let's say, like an account manager like myself, or different individuals within the financial industry, right? There's a lot of people that are willing to help you kind of explain a little bit more, right? So maybe by sitting down and talking with the account manager that you pick, like we were talking about before, right? The specific person that you pick, they can provide you with, let's say, a little bit more in depth of what you'll need in the future, and whatever the case is.
excellent. All are very good points. So like if you're with one bank and you have like a good credit credit relationship and things of that sort of nature with this one institution, is it easier to kind of travel to another bank and transfer and everything is all good and dandy, or is it like do you have to start from ground zero again? How does that sort of like the transfer process work?
So in this case, you're saying if you're with one specific bank and you're moving everything to the other bank.
Yeah.
So from my understanding is you're moving to the other bank. They don't really understand your relationship. So again, you have to prove that we can give you this credit by making sure that you bring the financials, whatever that looks like, and that way you can transfer. If it's credit that you're transferring, of course they're going to want to see that. But if it's investments that you're transferring, that's just very easy because they want the money, basically.
But what I'm going to say about that is pick an institution that is willing to be your financial partner for, let's say, life, right? Because at the end of the day, you don't want to like replace them. Yes, obviously, if they're not giving you with the solutions that you have, obviously, by all means, look at, let's say, someone else that's able to help you a little bit more. But by picking a financial partner instead of just a financial institution, it'll allow them to actually provide you with more, right?
Yeah.
And then if you want to, let's say, transfer, well, like your credit score will still be the same, but it'll just be impacting a little bit different in terms of credit history with that institution. So obviously, you'll have to prove yourself, like you said, but it won't really be starting from ground zero.
Zero.
But yeah, make sure to pick a financial partner, not just an institution itself.
Institution.
Pretty much all the institutions can provide you with the same things, but the individual itself will give you with a little bit more than what they're capable of, right? So.
Cool. No, good points. Good points. How do you like kind of shop for the individual? Is there any like good questions you should sort of? And I know it's not an easy question to answer, but like, what are some things that like I guess how do you kind of pick where someone's telling you what you want to hear versus someone that's like kind of out there to help you? Like, what are some things that like for the average person like myself can sort of watch out for, so that way I don't fall into any sort of like any sort of trouble.
Ask lots of questions.
Mm-hmm. Yeah, I agree with that. Ask lots of questions, but also stick with your gut feeling. Because at the end of the day, like if you ask a question and you trust his honest answer, then by all means go for it, right? But then if you ask for him to do something and it takes, let's say, 2 to 3 weeks for a simple task, well then obviously he doesn't have your, let's say, he doesn't have you in mind for that, right? Mm-hmm. Obviously you're on the side plate or whatever the case is. But if he's actually sticking to what he's saying, he's providing you with, let's say, the solutions that you're asking for or whatever the case is, then that's perfect, right? Then right there you found yourself a good financial partner.
Yeah, because quite honestly, once an advisor understands exactly what you need, they will try their best to help you as much as they can. They just have to understand exactly what it is that you need, so that way we're not providing you with, the wrong product. And quite honestly, we are being targeted for this. As institutions, I know like bills, we are being targeted, so we have to make sure that the products that we're giving to customers are suitable, and you've actually have the discussion that they do agree that they want them. So ask lots of questions for sure.
Another thing too is explain your business very, very well,
thoroughly.
In depth.
Yes.
Like go for lunch with the guy or the girl or whatever the case is. Explain your business, explain your needs, explain everything. This is where I came from, this is where I am, this is where I want to be. Right? The 3 different steps, well then now we'll be able to look at the whole picture, be like, okay, this is perfect. He's willing to work with me, I'm willing to work with them. Now it can be some sort of, you know what I mean? So if you put in the work to explain things like your view, your point of view with the business, so much better.
No, definitely. I think it's very important that, you have to, whoever you're going to be in business with and have a partnership with, it's like you have to be able to have a lunch and, have a personal relationship. Right? Like,
at the end of the day, we're all human, right? So you gotta be a good human towards each other and be able to help, right? So.
No, definitely. Just one more question I want to ask. It's like, what's like a kind of sort of the difference between having like a line of credit with a company and what's like a credit card? Like, which one's like better for having a business, and what are some of the?
Okay, so back to cost. If you're looking at a line of credit, depending on the institution, the line of credit I find has high interest rates on the lines of credits. Sorry, on the credit cards.
Yeah.
But with the line of credit, they tend to be much lower. They can give you a little bit of a larger amount when it comes to lines of credits, and the MasterCard tends to be just a little bit lower than a line of credit. So depending on the business, you could get a MasterCard limit for, let's say, $20,000. But then you could get a line of credit limit for $100,000, $150,000 with a lower interest rate. So then that's where you'd be using your line of credit to make, and this is what we always say, use your credit card to buy all your things, get the points, get whatever, and then use your line of credit to pay, so that way you're reducing the costs with the line of credit and the credit card.
Something I would be actually very like, just keep that in mind as well. That's
Yeah.
very good points. But another thing too to mention is line of credit's mostly to keep inventory, right? Like your account receivables in check, your account payables in check as well, and also like your inventory, right? Those are like the majority of the things that are kept in mind for a line of credit, right? Because obviously you can't really buy an abundance amount of inventory off of a credit card, depending on the limit of it, right? But in terms of a credit card, well, you can go for those lunch dates, or you can go for those, let's say, go get yourself a coffee for the team, or the lunch for the team sort of thing, right? Or gas, whatever the case is. But for the operating line, then usually you'd utilize that for the inventory needs or whatever it is.
No, those are all very good points. Very good points.
Can I just jump in with one?
Yes.
one quick
No, for
comment?
sure. Definitely,
with,
definitely.
With depending on the type of business, like I'm glad you brought up the accounts receivable and that and the inventory piece. Depending on the industry you're in, you might get paid right away for the work that you do, but then there's going to be other times when you're waiting quite a while to get paid. And depending on the type of electrical business you're going into, not sure if you're going to do residential or commercial. So just to bring it back to a bit of a personal story, my husband's an electrician I shared with you, and he runs his own business, and we were working with, well, he was doing all the work, let's be honest here, and they changed their strategy, and they're a bigger customer, and they went from paying their accounts receivable, paying our invoices, they went from paying them in 90 days to paying them in 120 days. And we'd only been in business a couple of years, so when a larger customer changes their payment terms like that, it affects your cash flow incredibly. Mm-hmm. And if we didn't have a good relationship with our bank, and if we didn't have a revolving line of credit established, it could have been a very, very uncomfortable situation. Because depending as you grow, if you get some traction, you're going to have a lot more financing issues coming up. It won't just be about the smaller day-to-day bills. It's going to, if you start hiring people, it's going to be about meeting payroll.
Yeah.
That's a
right?
good thing too, yep.
And then all of the other costs that go with having staff. And so if you slowly work away and chip away, like at establishing that the credit and everything like that, then I highly recommend establishing that line of credit as soon as possible. If you don't need it, that's okay. Or just establish a small one. Like, I'm not sure the lowest amount that you can go on a line of credit, but just so that you have something, so that if something goes sideways, because honestly, it's not like that big customer gave us a phone call and said, hey, by the way, we're going to stretch our payables out 30 days, which means that's going to stretch your receivables out 30 days.
It's probably a letter. Here you
Yeah.
go.
Oh, no.
Yeah.
No. It was, oh my gosh, has that check not come in yet kind of
Oh,
deal,
wow.
right?
Yeah,
Yeah,
that's
there's
worse. Yep.
no letter. There was,
No.
well, if there
Oh,
was, I didn't hear about it, or somebody forgot to tell me about it, but that's going to happen sometimes along the way with your business. And if you've got that financing set up and available, it just takes,
Yeah, relieve some pressure.
it
yeah.
certainly
Yeah.
does, because if that's not there, guess where you're going for your cash?
Ooh.
You're probably your personal bank account, if you've got any. And then after that, I'm not sure where you're going.
Yeah.
You're calling someone up.
I'll be making some phone calls.
Yeah, definitely making some phone
But
calls.
I'm just gonna add on that as well, right? Especially changing those terms. 30, usually you see 30-60, if I'm not mistaken. Sometimes 90.
Yeah,
120 is a stretch.
Yeah,
but,
believe me, I was very
yeah,
surprised
wow,
when we got into
okay,
this
interesting.
business as well. I was
Interesting.
not, yeah.
But yeah, like, look, you do the work, right? Right off the bat, especially being an electrician, you do the work. Next, you know, you're not getting paid for the next 60 to 90 days. Well, your staff still wants to get paid.
No,
right?
most
Staff still
definitely.
wants to get paid.
They'll be
Inventory-
knocking on the door.
Yeah, right? Inventory still needs to get bought for the next job or maybe the previous job. Well, that's why an operating line at a larger amount will be able to be able to help you and your business be able to kind of manage that, right? Unfortunately, a 25K credit card ain't gonna do you good for that, right? So, and especially at a higher interest rate, probably not the smart thing to do, but.
No, most definitely. Those are some very, very good examples. And thank you for sharing about those ones, because that's the thing about business. I mean, it sounds all nice just to be like, oh, let me just open up a business. But I mean, like, there's so many pitfalls that can happen. And, there's some jobs that just don't happen, or maybe there's a flood, and then maybe there's an insurance claim. There's so many things that can go wrong, right? And it's definitely challenging out there. It's definitely challenging. I think we're running out of time, but is there anything else that you guys would like to add on our panel today? The floor is open.
Well, if you guys have none, I would love to add something actually. So one thing I would love to add, especially for being a small business owner, is get into the routine of keeping your commercial account manager informed. Yes, I'm pretty biased because I am one, right? Keep us informed with where you want to be headed, where you are now, but also keep your accountant informed as well, right? Because if you come to us last minute and be like, oh, by the way, I'm about to miss payroll, I need something like yesterday. Well, we're very, very short and we can't really help you with that, right?
Yeah.
Keep us informed, or keep us, I should say, keep your group, like your tight circle informed. They're going to be so much easier to help us, so much easier to just work with, right? Because we already know the situation, we already know the company itself. Perfect. Then we can kind of move on to the next step and go from there, right? So that's probably my last piece of thing that I'll say right now. But yeah.
I'm also going to say this: if you're a small business owner that doesn't have like a sole proprietor and you're using your personal accounts for business transactions, please be warned, your accounts could be closed, because you're supposed to be using your personal account for personal expenses and for your everyday transactions. And so if you're using personal accounts for business transactions and they find out, they will warn you, but your accounts could be closed. So it's better to have a sole proprietor, something that's not going to cost you anything, and then run your business through that, so that way you know that you have a business account for the business. It's happened quite often, and I had to close accounts that I wasn't very happy about, but it has happened before. So for small businesses, come talk to us. Help you. Come talk to us.
Yeah, conversations are so key.
Yeah.
Don't be shy. Be open with
Just
your finance people and your accountant for sure. Yeah,
Absolutely.
No, most definitely. Ask questions, guys.
Yeah.
The resources are out there, and learn from the mistakes of others, right? So that way you don't fall into some pitfalls. So everyone, on behalf of the panel, I'm Mike Stevens. Thank you so much for stopping by, guys. It was very informative. I learned a lot. I hope you guys learned a lot as well, and thanks for stopping by.